Welcome to the Lanyap, a little something extra for your health, your family, and your future. Hosted by Caroline Badon, wife, mama, fitness and wellness guru, fashion and iced coffee lover, and the marketing director and podcaster for the Fussell Group. This podcast is your go-to for real conversations, expert insight, and the heart behind the Fussell Group's mission. Because life's not just about getting by, it's about showing up with purpose and serving the community with what matters. Let's get into it. Welcome back to the Lanyap. I'm your host, Caroline Badon, and today I am here with one of our tried and true agents, Sandy Johnson. He's been with us for quite a few years. Super special part of the Fussell Group team. And he is here today to discuss ancillary products with me. Ancillary products are things like cancer policies, heart attack and stroke policies, all types of different things. He's going to get into it, but they really help fill the gaps of your actual health insurance plan. So Sandy, if you don't mind, let's start simple. What do we really mean when we say ancillary policies?
Okay, when we're talking about ancillary products, we're looking specifically at hospital indemnity policies, cancer, heart attack, stroke policies, things that are going to help to cover some exposures that a lot of our clients are not actually aware of. And being a healthcare professional, that's our job to make sure that we not only take care of the options from a Medicare perspective, but also covering those unexpected expenses that they don't know or are aware of initially.
So things like cancer, what are the different options? Cancer, heart attack and stroke, hospital indemnity. Am I missing anything?
There are actually those are the main actual ancillary products. When you're looking at cancer, heart attack, and stroke, you're looking at something that's going to give additional coverage outside of your basics from a Medicare perspective, and also you mentioned the hospital indemnity policy. It covers some of the unexpected expenses, especially those that are a bit on the high side, so that our customers are not financially exposed. So we want to make sure that those things are actually implemented and they're combined with the coverages that they have to make sure that they don't experience any unexpected cost.
And I think one thing that maybe is unknown to our consumers is
Mhm.
that it's a cash benefit.
Absolutely, absolutely. With an ancillary product, in most cases, you're going to have these policies put in place, and those payouts are going to go directly to the customer. It's not going to the hospital or to some other secondary vendor or whatever the case may be. It's going to go directly to the customer, so it gives immediate relief in the sense of it's coming directly to them, and it's going to help to offset their costs.
So why are these types of policies so important for individuals and families to consider? I mean, we know life is unpredictable, things happen, but like you said, it just fills the hole. So major health conditions or diagnoses like cancer, a car accident, they can cause stress of any types. But the fact that it's a cash benefit and it goes straight to you, these things can help cover being out of work or not being able to cook and having to eat out or whatever it may be, right?
Right. To your point, these policies are in place to help the situations as they arise. Because as you may know, one of the main factors in financial ruin are medical bills and unexpected medical bills in particular.
hmm
However, if you have these particular ancillary products in place, it's going to offset or prevent the risk of that ever happening to you. Also, to your point, when things like that happen, whether it be heart attack, cancer, stroke, there are going to be some things that are going to change. Is the main breadwinner in the hospital, so now the funds are not coming in to cover bills, things of that nature. Or if it's not that situation where you have to actually go to a hospital in another area, there's traveling expenses, there's food expenses, things of that nature. Those are lump sum amounts that need to be actually gathered, and it helps to offset those expenses in the sense that you don't have to worry. It's enough for a customer or a client to be in the hospital recovering from some sort of preventative treatments or some cancer diagnosis or heart attack strokes. They don't need to have financial burden on their minds as well.
Right. So it's all about keeping the household running while they're recovering.
Absolutely.
So is it fair to say it's kinda like a savings account? You know, as a teenager, your parents tell you, "Put $20 a week in your savings account, and a year from now, you'll have this much money in your savings account." It's
Absolutely.
it's kinda the same thing. You pay the premium, which is not an outrageous premium every month, and then you know when something happens, you have that cash to fall back on to protect yourself.
Absolutely. And to your point, once again, It's a safeguard and it can work as a savings account simply because when the time comes, you have it there. It's little to nothing. When I say little to nothing, it's minimal. It does help from a budgeting perspective so you don't have to mortgage your house in order to have these particular ancillary products. It's going to give you the peace of mind of I'm taking the initiative just in case because we never know what life is going to do from a healthcare perspective, but it's always good to be prepared.
Filling in the gaps that the health policies don't fill.
Absolutely, absolutely.
So let's talk specifics. How does that work? How does a cancer policy work?
Okay, a cancer policy in and of itself is going to help for someone who, if they've never had cancer, of course, that's one thing, or if they have had cancer in the past, however, if it has been a specific time frame, if they've had no reoccurrences and things of that nature, they can still get these particular policies. Typically, it's going to be a 5-year look back period that you're talking about when you're talking about someone who's actually applying for a cancer policy. But they get to choose. You have lump sum amounts, and depending on the carrier, those lump sum amounts are going to be anywhere from $5,000 to $75,000 in coverage.
Mhm.
But we are very specific about catering to the customer's budget, making sure that we are not offering something they cannot afford. We're going to make it affordable, and we're going to make sure that we customize the package for them, and it's going to help offset those costs. Cancer, in and of itself, whether it runs in someone's family or whether it does not give you any sort of
Heads up.
a absolutely, word I'm looking for. Not doesn't give you a heads up of, "Here I come." It's sort of unexpected, but this is what's going to offset those unexpected moments.
Awesome. So what about heart attack and stroke coverage?
Okay, similar scenario when you had the heart attack and stroke coverage. Again, you have the ability to customize the specific lump sum amounts. You can also add riders to that. Now, those amounts again from 5,000 up to $75,000, and you can add riders to actually increase. With each year, we have what's called a lump sum rider that can be added to each policy that will actually allow them to add either 500 per year or $1,000 per year. What that does is it keeps their prices affordable while adding to the face value on a yearly basis. And also one thing I would do want to mention is in most cases, both of these policies, whether it be heart attack and stroke or whether it be cancer, they also have a recurring benefit as well. What that means is basically if a client is diagnosed with cancer, heart attack, stroke, whatever the case may be, and they have that lump sum payout. Within a 5-year period, it will also pay that same face value again. But in between, you say, well, what if something happens year one, year two, three, four, all the way up to five? Both policies will actually give them a percentage of the face value up until that 5th year so that they are not left out in the cold. So it's not like you have to wait another 5 years to get something. You're going to get something regardless.
Awesome. Awesome. So let's jump into hospital indemnity policies. Can you
Perfect.
explain those a little bit?
Absolutely. With most of our Medicare Advantage plans, there are what we call there are costs that are going to be a little more than a specialist for a doctor visit or just a PCP visit or your primary care physician visit. There are other costs that may be a little on the larger side. Ambulance costs, inpatient stays,
Mhm.
inpatient hospital stays in particular, outpatient costs. Those hospital indemnity plans help to cover those holes as well because typically with a Medicare Advantage plan inpatient hospital stay, for example, all of the actual plans have a specific amount of days that the customer is responsible for before the benefits kick in. That could range anywhere from 5 days, 7 days, 10 days, even up to 14. That being said, if the client is in the hospital for those days, they can be up as far as out of pocket expense, well over $2,000. So I typically will ask that question, well, are you prepared to pay this $2,000 if you were to stay in the hospital for this particular amount before your actual benefits kick in? Most have never thought about that question.
Right.
Whereas they look at the part where it goes to zero, it's like, well, wow, do I have 2,000 just laying around that I can pay out of pocket without even thinking about it? So we have a hospital indemnity product that will actually pay them X number of dollars for the days that they're in the hospital. Normally, it mirrors the amount that their plan has,
Mhm.
so that if they are in the hospital for 5 days, 7 days, 14 days, not only they're being billed because that's the way their plan is structured, but this plan takes that money and it gives it right back. So in a lot of cases, they will not only have that amount, but it's going to put that money right back in their pockets. And again, these payments go directly to the customer. It does not go back to the hospital, so they can pay those things off.
Which is great because and I also remember on one of our calls when we were discussing, and training on these products, sometimes you get more money back than you even spent.
Absolutely. Great example. If my particular policy says that my hospital visits or hospital stays are at $125 per day for the first 5 days, and I am in the hospital for 7 days, when the policy in and of itself, we'll try to make sure that it matches that amount. Well, if the amount selected is $150 per day or $200 per day, and I am in the hospital for that time period, I'm going to get $200 for those 5 days as opposed to the 125 that
That's
my
owed.
exactly from my plan perspective. So I'm making money. And furthermore, if my plan says the first 5 days and I'm in the hospital for 10 days, I'm still going to make money from days 6 through 10
Mhm.
just based on the fact that I have this policy in place and it's going to protect me. So I've
Exactly.
made money in that case.
Yeah, so it just makes sense.
Absolutely. Absolutely. It gives you peace of mind.
So what are some of the biggest misconceptions people have about ancillary products?
One is, oh, that's just it sounds great, and I'm glad that you mentioned it, but it's just too expensive. Most of these products are going to be more than affordable once you look at the actual the pricings themselves. And like I stated before, we're going to cater to a client's budget, so we're going to make sure that it's something that is going to be well within their price range.
That and they think their health insurance plan covers everything.
Absolutely, and that's the other thing is when we're talking about exposures and just knowing that their health insurance only covers this or covers 80%. That 20% sometimes can be larger than a customer actually realizes, and that's what we're here to make sure that they do understand is, hey, we're trying to protect you to make sure that no occurrence creates financial ruin.
Right, right. So how does the Fussell Group help clients decide if these policies are right for them? What's the process? Do they sit down? Is it an easy enrollment? If you'll get into that a little bit.
Very much so. Here, we stress the fact that we're not just insurance agents. We're here to make sure that we cover our customers in every aspect of their health insurance needs.
Mhm.
So when we're typically going and talking to a client, whether it be about a Medicare plan or a ACA plan, whatever the case may be, we look further or beyond just the actual policies that we have actually discussed to cover one need. We want to look at the future. We want to look at the things that are not shown or openly discussed during that time with your ACA policy, with your Medicare supplement. Even there are some gaps that our clients are not aware of, and as healthcare professionals here at the Fussell Group, we want to make sure that we cover all avenues. It's one thing to actually mention that the cost may be A, B, and C, but it's another thing if we don't mention it at all, then we've got our customers exposed, and we do not want that at any time.
Right, right. It's our job to make sure they're protected.
Absolutely.
So, as we head into open enrollment, which is very close and
Yes.
beyond, what
Yes.
advice would you give to your clients or listeners who are looking for guidance with Medicare plans, under 65 individual and family plans, ancillary products, all the things that we offer?
I would first and foremost say make sure that you have an agent that is going to actually go over your healthcare needs from head to toe, making sure that you're covered in every aspect. That being said, here at the Fussell Group, that's what we do. That's our MO, that's our DNA. We want to make sure that you are covered in every aspect, not just cover one thing or what you called us for. We want to make sure that we leave no stone unturned and that you are completely covered in every aspect and when it comes to healthcare and that you can sleep well at night. And that's the bottom line.
Yeah, and don't wait until the last minute when something happens to say, "I wish I would have done this and had coverage."
Absolutely.
These products are meant to help with the unexpected times. So,
Absolutely.
going ahead and getting them and sitting down with somebody and seeing what it's all about is important.
It is very important and understanding that the sooner the better.
Yes.
That is going to really help to offset some of the unexpecteds that do come along in life. And again, like I stated here with the Fussell Group, that's what we do. We want to make sure that you are covered. We're going to come back and check on you to make sure things are going well for you and make sure that you understand every aspect of your healthcare plans.
Right. We're the gold standard of insurance.
Absolutely.
Sandy, thank you so much for joining me today and
You're
giving
more
us
than
all of
welcome.
your knowledge and expertise on ancillary products. I am
You
so thankful to have you on this show again.
Thank you so
So,
much.
and to our listeners, remember your health insurance coverage might not cover everything, and that's where these ancillary products come in to help fill in the gaps, like the heart attack and stroke, hospital indemnity, and cancer plans. If you'd like to learn more, please give us a call and we can set you up with one of our local licensed insurance agents. Don't forget to subscribe to the Lanyap podcast on YouTube, and we'll see you next time.
Thank you.
Thanks for joining us on the Lanyap. We hope today gave you the little something extra that you needed. Be sure to subscribe, share this with a friend, and follow us on social at FGIALA for more tools to live well and make the right decisions for your health and future. Until next time, stay golden, stay the course, and never forget, we'll be there for you.